Well, you're still tuned in to Taking Stock. It turned out to be a good session on Friday for us, with the Nifty going home with gains of 0.7%. We had the Bank Nifty, which really outperformed on Friday as well as for the entire week. We have Sudarshan Sukhani joining in now with his view on the technicals for the next week, as well as to answer all of your stock queries. Well, Sudarshan, overall, good session. What do you make of the markets and the technical levels you're watching for next week?
Yeah, good afternoon. See, it was a good session today and a very good April series. I think both have been very enjoyable for traders. A one-sided move, and that move was continued today. The Nifty broke out from an 8-day trading range. Such breakouts normally lead to higher levels. In this case, perhaps 10,800 could be a very reasonable target to be looking at. It's not very far. But traders must be aware that markets can be volatile. So you should have long positions in this market, or even try to initiate them on Monday morning with a proper stop. Your stops are 10,610 for the Nifty and 25,000 for the Nifty Bank. With these levels, so far as the indices are trading above these levels, every day, every breakout is a buying opportunity.
All right. So, Sudarshan, does that apply to the individual constituents of the Nifty Bank? Would you say that the kind of moves we've seen on Axis, SBI, ICICI Bank, are all the stocks looking equally good?
Actually, it's much easier to trade the index, that you also know. But within the index itself, the Nifty Bank, the private sector banks are worth buying into. But the rally in the public sector banks that we saw today could be a flash in the pan. And even if it is not, let's assume that they continue for a day or 2 days. These are bear market relief rallies, the PSU bank rally. So avoid the PSU banks and focus on the private sector banks, whether it's Yes Bank, even after that 13% rally, or ICICI Bank or HDFC Bank, which could now start performing. Yes, the private sector banks are worth buying into.
Okay, what would your picks be, Sudarshan?
Well, you know, we are spoiled for choice today. There are so many mid-caps that have been doing well for the last few days. So it's really, I mean, there could be any number. But we start with Apollo Tyres. At 2:30, I was hearing about MRF and how MRF has been performing. While MRF has been remarkable, other tire companies, primary of them being Apollo, has been doing rather well too. So Apollo Tyres is a buying opportunity. That trade should be taken on Monday, obviously, but you could actually continue with this for a few days. So Apollo Tyres is the first buy. The second is my favorite, Bata India. Bata India is on the verge of a significant breakout on the upside. It's pushing against its resistance levels. It's been an outperformer and it's in a good sector. So the second idea is again to buy, and that's Bata India. The final pick I would suggest is Century Textiles. Century Textiles has been underperforming the market, but it's building a very attractive base. So here we are buying on a dip, anticipating that this dip is coming to an end. It's a very good location to go into if the stock is going to go up. We are literally buying at the lows. So 3 ideas, all for buying. See, once the market has given us a breakout, we do not go short. So stay on the long side and enjoy the rally.
All right, good going then. Sudarshan, we also have some Twitter questions coming in, so if you could take them up. Venkatachalaman has a question on Tata Global Beverages. He has 1,000 shares of the company, bought at a price of 287, and he's a long-term investor. He wants to know whether he should exit, average, or hold on. Now, Tata Global otherwise has been, quite a darling stock of the market. What would your view be, Sudarshan?
You're quite right. It's been a darling stock and will continue to be so. So if he's a long-term investor, generally long-term investors who are invested in blue chip and quality stocks, and Tata Global is a blue chip, it's a quality stock. So if you are invested in good quality stocks, don't even think of exiting. We are in the beginning of a bull market. Why do you want to exit? For Tata Global specifically, do not exit. Stay with it for 3 years and you'll be surprised that it could double itself.
Okay, well, Sudarshan, we have another viewer. Jay has 10 shares of Maruti, which he's bought at 9,090 rupees. He can hold the stock for 6 to 12 months. What's your advice?
Oh, you hold Maruti. I can't, really, I hope in 6 to 12 months, Maruti will be much higher than its cost price. But it's too short a time frame to be very sure of. Much easier is if you have Maruti, you do not sell it, you hold on to it. In 3 years' time, again, it'll outperform.
Okay, all right. Let's move to the next one. Twitter user Money has 140 shares of Sobha Developers. Price is 558 rupees. Wants to know if he should hold or sell out. And what would your immediate targets be on Sobha? I mean, better of the lot has been showing very consistent, sales as far as, the fundamentals are concerned. But on the technicals, Sudarshan?
Well, the immediate target, which means the next few months, 6 to 8 months, is 650. That's a good 100 rupees or 20% higher from where we are now. So he should hold on. Once it comes to 650, perhaps he can evaluate his holdings again. But it should. It's been an outperformer, and I think it will continue to do so.
Okay, well, one more query coming in for you, Sudarshan. Brijesh Mehta has shares of BSE, which he's bought at 900. He hasn't mentioned the quantity, but he can hold for 6 to 8 months. So what would you tell him to do about the stock, considering that it's a bit of a loss that he's sitting on?
Well, I was so pleased. We were talking about stocks that are outperforming, and the only way to go was to hold them. And this one is an exception. I think it should sell out. There's nothing in the stock, nothing at all. So it's nothing. It's very little difference between his cost price and current price. And even if it is, so just get out of it and go into private sector banks, buy Reliance, go and buy pharma companies. Pharma is just beginning a bull market. Why BSE of all the stocks? Just get out.